the Indian government has told the edible oil companies to now cut prices by rupees 10 per litre. This is being done, this is being directed basically to ensure that the lower edible oil prices are accessible to the final consumer as well. We have seen a sharp decline in the global edible oil prices, and the fact that India still imports nearly 55% of its requirement, it does tell you that whatever prices are ruling in the international markets is what Indian markets will also get. So since the prices have continued to decline, and when you look at whether it's palm oil, sunflower oil, soybean oil, all of these edible oil prices have declined anywhere between 30 to 40% from their 2022 highs. This is exactly what the Indian government is telling the edible oil companies to do, ensure that the retail prices also are cut. Now, it's not so easy. While we do understand that they have been told to do this in a week or 10 days, but this will happen in a month or 45 days. This is when the new edible oil starts coming in from all of these companies. It will come out with the markdown price there. Well, we also are looking at this happen as a step to ensure that one, there is availability, and two, that there is affordability as well. As soon as we get into the month of August, that is when the Indian festivities begin. The wedding season also begins. So it clearly has been quite positive as far as the consumption of edible oil goes. In any case, earlier as well, the availability was enough. It was the affordability or the prices which were running higher because of the fear that you would be looking at lower imports perhaps from Ukraine and Russia, which are the major breadbasket of Europe, and much of the sunflower as well comes in from both of these countries. And then we did see some protectionism measures also come in from Indonesia, where they banned palm oil exports. But all of that slowly seems to be changing, because we are looking at imports from the war-struck countries also. We also are looking at Indonesia now looking to export more. It also has cut its export duty. So there is surplus excess edible oil actually in the international markets, and that has worked in favor of the Indian markets as well. So the latest directive from the Indian government actually is something to cheer about. We do understand that in a matter of a month, we could be looking at the edible oil prices on retail level lower by nearly 10 rupees. This was done earlier as well. The last time the ministry spoke to the edible oil companies was in the month of June. At that time as well, we saw anywhere a cut between 10 to 25 rupees per litre. So another 10 rupees of a cut in edible oil prices actually will work wonders for the Indian markets there, and you could be looking at even lower prices going forward. Add to that the fact that we're looking at good monsoon, good sowing, good edible oil crop in other producing countries as well. So looks like the worst is behind us. We have seen the peak for edible oil prices for now, and from here on, for the next 3 or 4 months or the foreseeable future, you are looking at lower edible oil prices going forward. Well, that's about the edible oil prices, but keep an eye out on the energy basket as well. And the crude prices have continued to decline as well. 3-month lows onto this one. We are holding below $100 per barrel for the WTI crude prices, and meandering just around that $100 mark for the Brent prices also. We have seen a sharp decline in this week and month. It's turned negative for the crude oil prices, and from highs, the Brent is now 25% down in case of prices there. So we are in a bear territory of sorts, and many of the supply concerns really seem to be going away. Norway, which was going into a strike, now Norway oil and gas workers have had an intervention from their government, and we have seen that supply or that strike averted. So that is one out of the market. And then it also is about the fact that you are looking at not too much of demand coming in from China. Remember, China has been buying from Russia and at a discounted price. Their availability is on the higher side, so they're not really into the market. And then the recession fears, the fact that you are looking at higher interest rate hikes coming in from not just US, but perhaps ECB as well in this year, is something that is keeping a lid on the prices. As of now, for the month of June, the Indian diesel and petrol demand has been on the higher side. I mean, this is a time when you have cropping happening. There is a lot of travel happening as well. The markets are opening up. So we haven't seen demand destruction because of higher prices in Indian markets yet. But other places, we are looking at inventories increasing. Distillate and gasoline inventories have seen an increase in US. We are looking at lower demand right now from Europe as well, not just China. So those are some of the factors which are weighing onto the markets. Add to that the fact that the speculative buying also seems to have stopped. The long positions have continued to be curtailed. We are looking at short positions or bearish cues coming in for the market, and that is weighing on. Well, the street tells us that if the prices continue to hold below $100 for some time, then the next target is perhaps 95, 92, 88 on charts also is what is opening up now. And if you look at the far months, they have turned into a contango. Markets do believe that we are looking at a lower price right now and could be higher later on. So from a backwardation to contango tells you that there could be some more correction that you could see in the crude oil prices for the very near term. The next 2 weeks are going to be quite volatile, and after that you could be looking at a fair price yet again coming into the markets. For crude, it's also going to be about the hurricane season that starts in US, Gulf of Mexico, etc. by the time we hit August and September. So that's going to be yet another factor to keep an eye on. But most banks and brokerages now believe that the worst for this year perhaps has been seen in case of the crude oil prices. It's going to be consolidation through some more decline that you can be preparing for.